founded as an island that turned into a continent that turned into a nation. You know what I mean? It's been around forever. And we've never seen anything like NVIDIA. There was a comment that I read last night that I thought was really good, that NVIDIA is eating the world. And I thought that's kind of adequate, really, if you think about it. The Spot Gamma founders notes that I posted are certainly worth a read. And for those of you who trade futures and you don't really dabble on the equity side, I've heard from a number of people who said, I didn't really pay any attention to NVIDIA because what do I care? I'm trading the futures. That's really short-sighted. It is really short-sighted. You want to know what's moving price. Always. Every day, that's your number one goal, right? How are you supposed to trade in the futures if you don't understand what's moving price every day? And NVIDIA is moving everything. So whether you trade just in the futures or you're trading the indexes through the ETFs and you think you only need to worry about SPY, think again, because it's all about what's moving the market. The Fed minutes that came out yesterday with the MOC, by the way, was overshadowed by what we got with NVIDIA. But the market's going to circle back to that now. All right. It's what we have left. And the Fed says they would rather keep rates too high for too long if they're going to overshoot. They would rather do that than cut too soon. So it comes back to they would rather break it before they cut, just to be able to say we know for sure that we didn't cut too soon. We'll just wait until something breaks and then we'll cut. And then we'll know we didn't cut too soon. What records? It doubled and then it doubled and then it doubled again. It's per share, right? So it went from 50 cents to $1, from $1 to $2, from $2 to $4. And then this time it didn't go to 8, but it went to 5 something. And they overshot their earnings revenue by $1.25 billion. It was a $100 stock, what, 6 months ago? Not even a year ago. And now it's looking at $800. Their forward guidance is not year to year. They only do quarter to quarter. Even so, there is language about the next couple of years in their earnings, and they're not seeing any sort of slowdown projections until after 2025. And on a quarter by quarter basis, everything just continues to improve. Their supply chain issues are cleaning up, so they're getting product out faster, and yet the demand still is outweighing their production, even though they're producing more and faster and coming out with new products, including a new product launch in March. So they're improving the product, making new product, cleaning up their supply chain, getting it out faster, making the old product even faster, and they still can't keep up with demand. And they see no projections of it slowing down for at least another 2 years. It's unprecedented. Good morning, everybody. So the world liked it. NVIDIA took everybody by storm last night. NVIDIA earnings pushed the NASDAQ 2% to the upside, the S&P more than 1% to the upside. We're now above the options levels, so we can use those for support. The line in the sand at 5,000 on the S&P was taking out. Spot Gamma says just focus on that as a line in the sand now that we need to stay above. We're looking for a new leg up, so 5,100, 5,200 We got the NASDAQ this morning leading the way. Europe also reasonably decent data. Germany, the S&P 500 up more than a quarter. Japan around 1% with some reasonably decent data coming out. Even small caps up near 1%, the Dow right behind them. So the only real laggard here is Hong Kong. But even that one, you know, they're still trying to shovel stimmy out there. But as a government that's so just radically different than ours, their government can just straight up tell banks, you don't get to sell. No more selling stock for you. You can buy stock, you can hold stock, but you can't sell stock. And that is, quote, stimulus. Yeah, well, they're only holding it because they have to. That doesn't inspire confidence of wanting others to come in and buy it with them, right? So sure, it's not down that much, but you know, when the state tells you you can't sell it, how's it going to go down? Just, it's not really going to go up either. We're going to get some jobless data today. We've got a lot of Fed speakers today, and it's likely that they're going to get asked about those minutes that come out. We want to see them dance around this a little bit more. Remember, this bullish exuberance that's this unfueled, unmitigated run to the upside threatens everything that the Fed has been doing. All the hard work that they did to tamp down inflation by raising rates, especially very fast, was all designed to get us just above the neutral rate and to put us into a mildly restrictive territory. Well, with the entire global market ripping to the upside, it doesn't feel very prohibitive. It doesn't seem like they raised rates enough. If there's any sort of messaging in there where they start talking about, you know, we might just want to raise it one more time to tamp down these animal spirits, market's certainly not going to like any sort of discussion about another rate hike. Now, I'm pretty sure there's not going to be another rate hike, but just the conversation of another hike would tampen down this attitude. They can also just take off the board any cuts. Remember, the market has already priced in 6 cuts, and then they unwound a lot of those, which is what's put us sideways and sent us down some. They had to unwind that to 3 cuts. Well, if we have to take those 3 cuts off the board, that's going to put headwinds against the market and keep us back a little bit, slow this runaway train down a little bit. So we want to watch the Fed speakers and see if they start using that sort of language. The plunge protection team can slow things down just as much as they can pick them up. So we want to see if they start coordinating their language and their efforts on tamping down this bullish exuberance. We do have other data like global services PMI today, manufacturing PMI. If you use TradingView, you can see those, all right? There's charts for that, which is kind of nice. I think having the visual just kind of helps with understanding better what these data points are, what they're supposed to do. You can always just click on these 3 dots right here, and it'll explain what this is and what the number needs to be. A lot of these that are hovering around 50 is like the bull bear level, bullish above or good above and bad below, that sort of thing. So you can click on it, just click overview, learn more about it. You go to TradingView and you can see those charts, right? You can see those data points, which really, you know, brings it into focus. It helps you better grasp the levels of what it is that we're looking at on a week-to-week basis. Now, a lot of these charts are going to be on a month-to-month, right? Or a week-to-week, depending on which one it is. Like the job numbers, you can get weekly numbers. So that is a watch list that I can share. It's not something I think about sharing often, but only because I never really thought about sharing it before. But There's no reason you shouldn't have that, right? Everything from the employment numbers, ISM manufacturing, CPI, inflation, even the interest rate with the Fed, where we're at. Look at the exaggerated rate regime that we just went through, right? All of that. So I don't know. If you're interested in that, just hit me up. I'll send it to you. Just DM me. We also have the 30-year auction today. 1 o'clock. Keep your eye on the clock. It's a really big deal. I know these don't get a lot of attention on a week-to-week basis, and really it just seems like I'm screaming in a hurricane. Nobody ever hears this, but these auctions, while a lot of times they come and go and we don't see any reaction out of the market because of them, there's other times where the entire day flips on its head because of these auctions. And it is no skin off of your back to watch the clock and be prepared around 1 o'clock. The auction comes through and nothing changes. Fine. Hey, nothing changed. Didn't bother you any. If we're bumping across the highs and the auction comes in and we start running to the downside, you know to jump in with both feet. Take it all the way to the bank. Getting more data out of the ECB, as we can see with Finance Juice. They always do a really good job with these deep red backgrounds on their headlines to get your attention. I was talking with somebody yesterday who's kind of newer to trading. This site is something you want to keep up through the day if you're day trading. Anything that they deem market moving, they're going to put on this site. Now, there's a voice like a squawk that you can get if you're on the Pro Edition, and what they say on the voice is often 30 seconds or a minute ahead of what you see posted in the chat. And then they do like a countdown. So if they know the Fed minutes are going to come out at 2 o'clock, they'll start a countdown like, okay, 15 seconds. Okay, 5 seconds. You know, it just kind of gives you that heads up. They call out the repo every day, which almost never seems to get posted in the chat. So I don't get paid for talking about these guys. I use them. And even on the free version, you want to use this, right? So make an account. It doesn't cost you anything to make an account. Once you have an account, you can use the gear icon and remove the news sources that you don't want, like Fox News, CNN, MSNBC. You don't want that junk. Just turn that off. That way, what you have left is market relevant and useful to you. And then keep your eye on it through the day. If they think something important can move the market, they'll put it in here. When these Fed speakers are talking, if they say something relevant, they'll put it in here. So, you know, it's useful from all of that point of view. And then it has Tick Strike. Even the free version of Tick Strike is better than nothing. So if you don't know about order flow and you're trading in the futures or just day trading in the market, you want to understand order flow. This is the most simplest version of order flow because there's no visual to it. All you got to do is listen for it. It makes an odd sound. You can't miss it. It's very distinctive. And at the very least, it'll get your attention that we're getting order flow in. It's easy enough. I pulled the Thinkorswim level out, and I didn't get it put into my Thinkorswim. All right, the zero gamma and the volatility trigger are a lot closer together now. We can see we're back above the 3-week, back above the 10-day. We're already through the ADR half, and we've already hit the ADR full. That's just about as far as a market is supposed to go. Now, can we go farther than that? Yeah. Look, we can go a lot farther than this. But are we going to go farther than this? That's kind of the idea. On an average, day-to-day average, what's the market do? What is it has done over the last 21 days, in the last month? We've stayed between the red lines more often than not because that's the average, or we've run the ADR in a single direction all the way to the yellow line. So it only owes us what it has done normally, and we've done that. One of the things about these yellow lines and the ADR line half, the red and the yellow, is that if we get there really early in the day, it opens up the idea that we can go to the other side. Now, because we blew through all these levels, we're above everything. It's hard to see how we're going to fall down through them because we can consider all of it support or some kind of structure at least. So it's hard to see us falling down on the ES even to get to 5,000, let alone break through it, get underneath it. But on the day, we're really extended already, even just starting out. Here's the weekly pivot point at 50.05. So we went 60 points above that. There's the daily pivot point at 5,000 flat, or 66 points above that. So if we were just to turn on a regular everyday floor pivot, there's the pivot point, R1, R2, we're already there, right? There's one more, 5,100. It's a long ways off, but we're already there. Now, there's a lot of trading strategies that talk about having price go to the R2 as a rise up before continuation to the downside. But more of the strategies would focus on going to like an S1 to hit an R2, or to go to an R1 to hit an S2. So most of the strategies that focus on an R2 actually focus on a continuation from here to the upside. This gets us in a situation where we focus on it's gone too far, it's probably going to go down, and then a bunch of newer traders jump into it and try to short it. And then when you short those, we squeeze those shorts and we pop even higher. Squeeze them again, pop even higher. We just keep doing that. For everybody who keeps trying to short this thing, we just keep running them over, squeezing them and popping to the upside higher and higher and higher. And it exceeds these levels where we just think there's no way it can go higher than here. And it goes even higher again. Right? I think we've all seen those kind of days before. So we're extended, we're overextended, we're already at the ADR lines. This is where we would expect it to stop. It's done. But make no mistake about it, if we break this Globex high, we can yet again make another leg up even higher. It's been moving with confidence. It's not overshooting anything. It keeps the VWAP with it, so it's not getting unbalanced. And look at the volume flows this morning. Since last night, the flows have been strong. They've been heavy. They haven't backed off at all. And even with economic data on the table today, they're still pushing. So this can easily get to 5,100 today. Having said that, however, typically what we would expect is if we get to the ADR early enough, we can go to the other side. So right now, what I've been looking for is VWAP reciprocation. If we went this high above the VWAP, we expect to go that low below the VWAP. So we overshot it, came back. We did not get reciprocation. We did it again, got a higher level, and so far we did not get reciprocation. Want to break structure, get underneath the VWAP and get a 1-to-1, whatever we had on top, we want on the bottom, and measure it out it gets us pretty close to that ADR half, which is now structure underneath us. It's no longer like a resistance or a target like it was back here. So we could come back under the VWAP, find that ADR half, and build structure here. Support. It would become support the longer we stay there, putting orders in and filling orders on that level, right? It would start to build out a volume profile, like a price shelf. If we do develop that as a support level, we could then continue to rise up off of it through the day and see that 4,100, even if we pull back today. So if we're going to short this and run it back down, we want to focus on this 31. It's the COG line, 50.31. You can look at the 3-week right underneath it. It's close enough, 50.28. It's this entire price shelf right here. Got to get under that if we're going to focus on any sort of short. Otherwise, pulling back into this level is just structure and support. And should we overshoot that and get down into this level, there's more structure, more support. We've got to get through that. These lower levels with the volatility trigger, previous week's high, previous week's low, previous week's close, pivot points, daily pivot point, all of that lower structure, that can get cut through. But these two levels are going to be the meat of it. So ADR half, 50.41, and COG line, 50.31. If we can break this low, we have the opportunity to, at the very least, get back to where we closed at 4 o'clock. Beyond that, down to where we opened in the RTH and then to yesterday's low. And that would get us to the other side of the ADR, 40.90 and then 49.65. It can. Yeah, if this is a blow off top, it could go all the way back, right? It could. But for that to happen, it's got to get through VWAP, the ADR half, and then the COG line. And that's a huge ask. Just getting that done would be huge. But with the Fed speakers, right, and that news that came out in the minutes yesterday, this is a generic midnight anchor. So every night at midnight, it resets. If you just use Thinkorswim's VWAP, it starts at last night at 6 o'clock. This one starts at midnight. Ten-day, 30-minute volume profile. When we're at the lows, we expect to go to the high. When we're at the highs, we expect to go to the lows. That makes sense if you understand how this thing works. So it only matters where we're at right now. It doesn't matter when we look back and say, oh, look, that was the high. That was the low. It wasn't the high at the time. It wasn't the low at the time. It's the high and the low now. Point of control hasn't moved. Like we talked about the other day, it's not going to move unless we wipe out this volume. So the only other thing that would make this profile move its point of control is if we stay in one spot long enough to build out a new volume structure. Even when we lose this volume back here, we're also going to be losing this next level of volume here. And so it's going to get lower even when that gets lower. And so it's still not going to move at any time soon. So one of the things we want to be looking for on a different time frame is a new ceiling, right? You can see that using a TPO on like a 5-minute on this sort of a time frame. VWAP, not VWAP, point of control from the volume profile in green and TPO in blue. So we can see, for an example, all this volume down here. It wasn't enough. We ended up with more volume up here, but we spent the most amount of time there. So volume by time there, volume by price there, 2 different points of control. Typically, they're going to line up. They're going to be pretty close to each other. If we hit an iceberg, which would be a downside move, or if we hit a ceiling, which would be an upside move, it will look a lot like that, where it just is a large shelf, even though we spent very little time. So you'd want to see it really shallow on this side. You'd want to see it really high on that side. So far, nothing stands out. There's nothing here yet. But we can see where we had those sort of examples here, for an example, where we came up and hit into this, or say this level here. It was just a large amount of volume sitting there, like they were going to slow it down. They didn't, but they sure looked like they were giving it a try, and it just kept going. Like nothing slowed this thing down. It just kept right on going. We did make it through the point of control, so that one's off the table, but we have a new one from yesterday. So we'll just take that line and move it down here. $49.77, so a new VPOC. It just gets added to the collection, right? We've already got a lot of them down there. Not headed back anytime soon, likely. The weekly expected move. So remember, this was an elevated week. We had more volatility, so the range was bigger, even though we had less days. One of the reasons that this range was a lot bigger was because we were getting FOMC minutes, but mostly because of NVIDIA. Well, that's done. All the fear of what NVIDIA could have done to this market if it missed is off the table. So we're going to see a lot of volatility drop off, come off the board today, but we're also going to expect to see these ranges tested. Now, statistically, the S&P will close inside this box 8 out of 10 times. On any other product, it'd be 7 out of 10 times. So by Friday's close, we would expect to stay in the box. But it has not been keeping up with that statistic. It's been closing outside more than it's supposed to. Usually that's a warning that they're just missing, right? They're not pricing in the volatility that they should be pricing in. There's nothing we can do about it other than to just recognize that it's out of control and that it's escaping its boundaries and that it's breaking its statistic. That's really all we can do with it. It's a warning not to use, range bound strategies, credit spreads on the edges, butterflies, or even iron condors. But I think I've made my argument about not using weekly iron condors since COVID. The ranges are just too wide. We still need them to contract a lot more before we can do those weekly iron condors. When we broke through this cyan line and finally got above it, that's the year-to-date VWAP. I mentioned we're probably done with it for at least the first 2 quarters, maybe even getting into the 3rd quarter before we revisit that VWAP. And the only threat to that was NVIDIA. And again, we're done with that. So it's a good level to focus on if you're selling options on the futures. If you want to put on some, naked puts, focus around that level, or, you know, maybe slightly above at this point. Still shouldn't revisit that level for a while. Looking at where we're at on the 10-week, we're more than 3% above the 10-week. That's not overbought. We're not due a pullback. We haven't moved too far too fast on the bigger time frame. So in the last 24 hours, yeah, we've moved a lot. But bigger picture, we're not overextended. It doesn't owe us a pullback from here. So from a swing trade point of view, if you're looking at a lot of other things, trying to figure out, you know, are we about to get a blow off top? Not looking at this. We're in the upper edges to be sure, but there's still room. We can get another 1% above that 10-week moving average before we have to start really getting concerned. But again, looking at it on a day-to-day, we moved really fast. No doubt about it. But we're less than 1% away from the 10-day moving average. We're above it a little bit, but we're not overextended enough to warrant fear of a pullback. Not yet. You can certainly use a fib line. It's what I teach my coaching clients. You want to do a top down every day, right? You want to ask those questions. How far away are we from a daily fib, a weekly fib, a monthly fib? Did we hit one? Are we going to hit one? How far away is it? Where's it located? But I don't want to spend 5 hours in this morning briefing every day, right? If I can give you guys a specific task and you focus on it and you can set up your own morning briefing, because this is a learning event. I don't want to give you a fish. It's just a byproduct that I do give you a fish. The entire goal of the morning briefing is to teach you how to do a morning briefing. So if you already have the concept of the 10 and you're already thinking, why not the fib? Then I'm doing my job perfectly. You should do that, because that's exactly what you want to do. You want to have a consistent way to prepare for the trading day. That's my goal. It's what I've been trying to do in the last few years, is teach that concept. Prepare for the trading day. I tried to make a video on it. I thought that would be easy. Make a video, teach people how to prepare for the day, be done with it. And I tried over and over. The videos were too long, covered too many things. There's just too many topics. Couldn't fit it into a video. And what I finally came up with is you just got to do it every day. Just come in and do it, show it being done over and over and over, and people pick up the process. Semiconductors are up 5.5% with SMH. Of course, that comes from NVIDIA. I mentioned that yesterday, that if you wanted to trade NVIDIA's earnings and you didn't like the cost of those options, take a look around at ETFs that have NVIDIA in it. We looked around and SMH wasn't the highest one on the list, but it was the most well-known and the most liquid at the highest level. 25% of SMH is NVIDIA. Well, was NVIDIA. We don't know how, I don't know what the weight is now, but I'm sure it's more. Behind that, we have the Mag 7, up more than 4.25%. There's an ETF that you can use just called MAGS. That one came from TradyTick, I believe, but it might be Spot Gamma. Either one of those two. They use MAGS a lot. That kind of got my attention. I started using it. It's up 3.5%. Just your generic tech sector, XLK, is also up 2.25%. So this is the kind of day, this isn't a stock picker's day, right? You know, those days where you got to be real selective, careful what you pick. This is more of the alpha protocol kind of day. If you don't have an alpha protocol, it's a list that you put together so that if you have a 98% S&P run, right, where 98 out of 100 names are all going to the upside, you just buy every name on the list. You go in and you buy a call on everything that is in the list. And there's usually one or two laggards. You cut those quick, keep your losses small on those and let the others run. Because this isn't a stock picker's day where you got to go in and be very selective about the stock you pick. Just about anything you point at is going to be running today, at least in these groups and categories. Even instead of looking at what's up today, it would almost be easier just to look at what's not up today. Airlines. And they're not negative, right? So what do we got that's negative? Nat gas. Okay, I guess, short nat gas. As if it hasn't been shorted enough. Staples, maybe a little bit of capital rotation again, going back in the other direction. Energy, bonds, and more energy, but it's oil and gas exploration. Gold. Yeah, really, that solar. So, we can always find something to short. Otherwise, this is a long day. You want to go with the flow. The alpha protocol list changes for everybody, right? Think about when Amazon and Google were thousands of dollars. They were not in my alpha list at that point because they were just crazy expensive and their options were just massive. NVIDIA used to be in my alpha protocol list until its options just got too out of control, and now I don't have it in my list. So your protocol list should be a part of tech, consumer discretionary. It should be in at least the 3 risk-on sectors if you're going to be looking for upside moves. But really, on a day like this, when every sector is going to be moving to the upside and everything's going to be running to the upside, you don't have to be overly picky. One way that you can approach this is to use the advanced decline. I always stumble over that. The advanced decline. So Thinkorswim has this under index watch. You can set it to something like the S&P 100. The idea behind it is to see advancing issues hit 98 or 99. That's kind of my trigger point. I've seen people use less. You can do 95 to 97 names, but I kind of hold out for the 1%. So get it into a 98, 99 percentile. And then if it's advancing, you're buying calls. If it's 99 out of 100 that are declining, then you buy puts. And you don't pick and choose. You just buy everything on your list because it's your list. You pick and choose what's on the list long before the day comes where you activate your alpha protocol. This is basket buying. It's exactly what the algos do. All right. It's where the entire concept came up with it. If it's good enough for them, it's good enough for us. The difference is, right, they have a lot more edge than we do between the bid-ask spread, commissions, everything else, right? Even just size. So they don't need 98 or 99 out of 100 to do this. And they do it for a lot of different things. News releases, all sorts of reasons that they'll buy the basket. For us, at least for me with my money, I activate the alpha protocol rarely. I think I did it 3 times last year total. So, it's not something that happens frequently, but this would be the kind of day for it. Just about anything you shake a stick at, especially if it's on the protocol list, right? If it's the Mag 7s, you might want to avoid the China ADRs. I guess that'd be worth a look, right? I mean, JD's up a little bit. When it comes to those China ADRs, though, just the state ordering those banks to buy and the state ordering the banks not to sell. So these are kind of holding up, but that doesn't really inspire a lot of confidence for wanting to take some longs. To get some day trades, I mean, sure, if they're going to move around, might as well. But with other things that are moving so much more, why would you focus on this junk? So you can look at that route. I think you'd be better off focusing on probably another group. Yeah, if you were gonna avoid the options and just do shares, you can still do an alpha protocol. You would just have a select number of shares that you would buy. That's one way to do it. Say you would get 50 shares on each stock, or you would have a dollar value. Generically speaking, say you want $500 per every name on the list. Then you would buy X amount of shares until you reach $500, and then that would be your cap per name. And that way you didn't exceed whatever your buying requirements are. And then you would have you're trying to get a normalized distribution in the group without, quote, picking a favorite or, leaning too heavily towards one name or another. And then just be prepared to cut whichever laggard there is, because there's almost always a laggard, right? There's almost always one name that is bucking the system. Apple for a while was the Mag 7 turd in the punch bowl. Everything else was doing okay, but Apple just continued to bump along the lows and break down to new lows, so there's always one, right? It seems no matter how good your list is, there's almost always one name that's bucking the trend. So be ready to cut at least one. So we can see on the list, SMH leading the way, tech right behind it, pot stocks. So, when we're saying that just about everything is up this morning, the other day, the only thing that we could really find that was up was uranium and pot stocks and a little bit of transportation. Now we've got pot stocks mixed in with everything else. China ADRs through the KWeb is up. Bitcoin products are up. So we've got small caps, large caps, mega market caps, big tech, consumer discretionary. We got it all, right? There's 3 sectors that we focus on in a risk-on environment, in a bullish market. Top 3 sectors, XLF, XLK, XLY, consumer discretionary, technology, and finance. But it can be fintech, right? So then you're back to finance, technology combined. Or it can be communications names. It's still tech. It's just communications. So, it's not like it has to only be these 9. It can be variations of these 9. SMH, semiconductors, it's still tech. So it just gets lumped right back into the same bowl again. It's that kind of day. If you look around, you'll find something that is not performing well, but you'd have to hunt for it, right? That's kind of the idea. Uranium, healthcare, silver. So even got some precious metals in there. Some commodities are down. Agricultural is down. Utilities. So, you can always find something. Give it some thought. The alpha protocol should not be something that you whip together off the cuff. You really want to put some thought and consideration into the names that go into that list. They need to be something that you can afford. If you're going to do the options, you want highly liquid options. So you want to know how they correlate with other names, how they correlate with the S&P. You can look at their beta on Thinkorswim. I don't know about other platforms. So we'll just randomly pick something. Say I want to put Bank of America in my alpha protocol list. I don't know why you would, but whatever. Just check your fast beta, right? 1.0 is going to be on par. Below 1 is not even matching S&P. So you want it at least at a 1. This is like a correlation of, that's not a perfect explanation, but it'll get you started. You can change this from fast beta to just beta. There's really no need to, though, unless you're going to look at more of a swing trade concept. If you're just doing day trade stuff, keep it on the front end, keep it on fast. Oh, and inverse products are going to look crazy in there. So, you try to do something like bonds. No, right? VIX. No. Okay. So don't be surprised if you try putting, I don't know, treasuries in there or something, or oil or gold bonds, that you just don't get anything, right? Hey, we got something there. Gold is not correlated with the S&P. Imagine that. Who'd have thunk it? So we do have a nice setup today on equities. Apple, for an example, has an inside day breakout and it's fading back to catch that support. This is healthy for a run. It's exactly what I would want to see. We fade back to yesterday's high, find some support there, prove the breakout is valid, get like a Busby set up. Now, if you're cautious, then you'll want to wait until it breaks this high and then take it long. Just look left, there's your target. If you're aggressive, just catch it on this low, either in the pre-market with shares or wait until we get into the open and take the options from there. But if you're running the protocol, it won't matter. You don't time it that way, right? You just get everything as soon as you get the correlation. It's worth noting that the NASDAQ has more of that blow off top look than the S&P does, right? Because we were up over 2%, where now we're just at 2%. So if there is some sort of blow off top scenario, then it would more likely come from this or be in this compared to the S&P. Generically speaking, it needs to hold above 17.8. That would give it a decent pullback for a continuation. And that measured the entire thing, when really we don't even have to do it that way. We can just do whatever we got out of Globex, right? So there's the 22nd, mark yesterday's close. Do just the Globex from its highest to its lowest point. At the very least, you could expect that half back down to 17.8. Imagine that. It's the same level, isn't it? Like I've said before, when your lines match up from different sources, you know you're doing it right. You know you put your lines in the right spot when they're validated by lines from another spot. But it gives us a higher level for, must close. So if it breaks the quarter at 75, you could look to, at the very least, get a retest on the half back, 17.8. That's kind of the line in the sand. But this is think of it as a zone. If we get through this zone, it won't matter about optionality levels and ADR levels and all of that. We get through this and we can start focusing on yesterday's Globex levels. Everybody be careful, be safe. Watch the clock today. We got a lot of data still with those Fed speakers. I'll see you all tomorrow.